Investors are all at Twitter about Twitter. The social media and microblogging site is going public in what is the most anticipated initial public offering to come out of Silicon Valley since Facebook. Twitter hasn't indicated how many shares it will offer or the share price, but based on sales of shares in the private market in August, Twitter estimates its own value at $9.7 billion. That would value the short messaging company at 22 times sales over the past 12 months ended in June. So given what we know now, is Twitter's IPO a good investment? Joining me now to size up the company and its IPO is Santosh Rao, Senior Equity Analyst at Greencrest Capital Management, and Francis Gaskins, President of IPOdesktop.com. Gentlemen, welcome.
Thank you.
Thank you. Thanks for having us.
Francis, let me kick off the conversation with you. I want to start off with the business of Twitter. How strong is Twitter's revenue model?
Well, Twitter has is branded. It would be hard for people to compete with it, and they're estimating $1 billion in revenue for next year. This year will be about $552 million, according to estimates. So next year is projecting an 85% increase in revenue. So I think based on that, the revenue model itself is very strong.
Santosh, Twitter has 218 million monthly active users. That compares with 1.15 billion for Facebook. And by the way, Twitter estimates that 5% of its users are erroneous accounts. And underscoring that, certain advertisers are concerned whether they're reaching a mass audience with Twitter. Ad prices are falling. Does that give you pause about Twitter's ability to lure in advertisers, or do they simply need more time?
Yeah, I think it's a question of time. I'm not worried about the fake accounts, the 5% that you're talking about. Twitter is known to have a high churn rate, so people come in and out, that's fine. The 218 million is a good number, and it's growing at a good clip. Of course, it's going to be up and down here and there, but overall, I think it's on a good run rate, good growth rate, rather. So I think advertisers are happy with it overall. I mean, I know the advertising rate per unit is dropping. It dropped the last quarter, but overall it's on a good trajectory. So I'm not worried about that. And I think as the company improves the targeting and provides more content and increases the user base, advertisers will be happy and it will keep coming back. So that's not a big concern for me at this point.
Santosh, Twitter sales doubled in the first half of the year. What's your outlook for revenue, and what are Twitter's options for increasing revenue going forward?
Yeah, I think they're on a run rate of to around 600 million. So that should not be a problem. The second half is usually their seasonally the stronger half. So I can easily see them crossing 600 million. And my forecast is between 600 and 625 million for 2013, and on a run rate for doing $1 billion revenue for 2014. So they're on a good track there. And right now, their promoted accounts are doing well. They found good traction, but they have a number of other sources to kind of increase their revenue. One is the international base. They need to monetize that better, and they're making a number of moves out there, like providing self-serve ads in the international markets, providing more apps for feature phones, which is the predominant device in the emerging markets. There are a number of other things, even in the US, they're adding the second screen, the Amplify, and a few other areas that they are looking at. I can see e-commerce coming down the road. So I can see 3 or 4 things, revenue streams that are in the pipeline that should take some, get some traction down the road.
Francis, what about mobile, right? Unlike when Facebook went public, Twitter seems to have figured out mobile.
Yeah, they do. And one of the things I wanted to comment on was the gross margin. And Facebook's gross margin for the 6 months ending June was about 73%, and LinkedIn was 84%. Twitter's was 64%, which is up from 59% for the 2012 year. I think as they go forward and have more of a critical mass, that their gross margin will go up. So that's one of the things I look for is an increasing gross margin. I think there's room for Twitter to do that. Well,
Francis, what about profit margin, though? Because profit margin was pretty low for Twitter. Clearly, Twitter is not profitable yet. Are investors inclined to give Twitter a pass for being unprofitable, given that it is an early-stage company, perhaps much like Amazon when it went public?
Well, I think in the case of Twitter, it's okay. They're good. They're betting the farm. They're not a big company, a giant company yet. And as I said, the thing I look for before I look at profit is the gross margin, and can they increase it? Because with a higher gross margin, they can drop down to the bottom line. So there are a number of companies that have gone public this year that have had top line revenue increases that are branded, that have strong recurring revenue streams, and they typically have a loss as they're building their top line revenue, and that's the case with Twitter. I think Twitter is going to grow into its market cap. I think it's unusual. It's one of a kind. And if they're projecting $1 billion in revenue next year, it could come at 13 times price of sales on a forward-looking basis.
Santosh, how long before Twitter becomes profitable in your view?
Well, I think it's late 2014 or early 2015. That's when I have them turning profitable on an operating basis. On an EBITDA basis, they are already profitable. This in 2013, and I think they should pick up there. But on an operating basis, I would say late 2014 is when they should become profitable.
Francis, should individual investors invest in the Twitter IPO, or perhaps should they wait 3 to 6 months to see how things shake out a bit?
Well, I would say if they can get Twitter in the IPO, they should go ahead and do that. And what happened to all the social media stocks, with the exception of LinkedIn, in the last couple of years, is they popped up in the first 15 to 20 minutes to 30 minutes, and most of them never ever saw their highs again. But Twitter's different.
Why is Twitter different?
Well, Twitter's different because it's heavily branded. People know a lot about Twitter. It's not quite like Google when Google went public in 2004, but there's common knowledge of Twitter out there.
But people knew a lot about Facebook, didn't they, Francis?
Well, that's a good question. Facebook was coming at 100 times earnings, and that was too high. Facebook's rate of growth was declining. Their operating profit was flat. And with Twitter's case, next year they're looking at 85% increase in top-line revenue in that range. And so the institutional investors will pay up dearly for companies that have top-line revenue increases in that category. And I agree that it might break even and start to make some money late 2015, which is certainly within the viewpoint, the view of institutional investors.
So then, Francis, it's pretty safe to say that you think that Twitter's IPO will go a lot better than Facebook's IPO did.
Well, I really do think that. And Twitter has a VC group that really is professional, and they run it professionally. I think in the case of Facebook, they weren't ready to go public in terms of their outlook, their management. And I think they did get their act together. I think it's now more professionally run. And there's no rebellion at all in terms of the Twitter management team. They want to work very closely with Wall Street, which was not the case with Facebook.
Well, one thing's probably for certain. Twitter CEO Dick Costello probably won't be sporting a hoodie to pitch his firm to Wall Street, right?
Right, and he probably won't be late to meetings in Boston either.
Santosh, what do you say? Should individuals invest in Twitter's IPO? How's valuation?
I think Twitter, I agree with most of what Francis says, in fact, all of what he says. I just want to add a little more to that. I think Twitter has figured out a mobile strategy, which is very important. And I think the big investors, of course, they'll find out more on the roadshow, but I think there are not that many surprises. They've learned from the Facebook IPO, so I think they've got all the bases covered, I feel, at this point. So investors, and more than that, I think they've managed expectations better. Even the pre-market, the private market trading was very well controlled, and so there was no hype and hyperbole and all that stuff that Facebook had. So I think they're coming into the market at the right time and at a very early stage. I mean, Facebook was much later in the growth cycle, and most of their growth was done. And so Twitter, I believe, is kind of coming at a little earlier stage. So there's a lot more growth ahead. So people should, it's a good valuation. But having said that, I would wait to see how many shares they're offering and at what price. If it's closer to 20 bucks, 19, less than 20 bucks, it's a good buy. If it's 25 and up, based on my valuations, it's too high. I would say low 20s is a reasonable one. My overall enterprise value is about 12 billion. So looking at a forward number, I'm saying it's 12 times forward revenues, which is in line with Facebook, maybe a slight premium to Facebook, but not too much. So that's more reasonable. I think investors will buy into that. But if it's like 13, 14 times forward revenues, I think investors are going to be careful.
And gentlemen, when we talk about getting in on the IPO at these prices, you're talking about getting in on the ground floor, right? The retail investor calling their broker and trying to get in as opposed to buying in on the first day when it spikes, right?
Right,
Yes.
right. That's what I'm talking about. But I think in general, as a rule of thumb, I think retail investors should wait. It's a losing game because you don't have all the information that the professionals have. So I mean, it's a very speculative game. If you want to play that pricing game, then you can get in ground up. But if you're
Well, how long do we wait, Santosh? What, like 3 to 6 months, or what are you talking about?
Well, I would say, wait at least a month and a half to see what's going on. Let the initial, it also depends on what price they come out at. So if they come out at a reasonable price, at a 20, 21, I would get in even right away. But if it's way high, I would wait for a pullback and then kind of get in. So anyway, I think I would say a month or two. It's tough to say. I mean, that it really depends on how it's trading and what the speculators, investors, how it's all coming together. So it's tough to say that.
Well, gentlemen, it will certainly be interesting to watch how this IPO goes. Thanks so much to both of you for being with us.